Welcome to The Explainer. Today, we're diving into a massive, and I mean absolutely massive shift in global finance and national policy. We're zeroing in on one incredibly busy, almost unbelievable week for U.S. Treasury Secretary Scott Bessent. The sheer scope of what the Treasury Department has been up to lately, it's honestly breathtaking. I mean, we're talking about everything from moving the needle on international currency markets to redefining national symbolism and even pushing to rewrite the future of digital money. We've got a ton of fascinating ground to cover, so let's get right into it. Okay, let's dive into this. To make sense of this wild week, we'll break it down into a few key areas. First, the whirlwind week and that Camp David signal. Next, the Japanese yen intervention. Third, the historic gold coin. Fourth, the Digital Asset Clarity Act. And finally, we'll wrap up by looking at Secretary Bessent's expanding influence overall. Section 1, a whirlwind week and the Camp David signal. So this whole week actually kicked off during a highly consequential closed-door cabinet meeting at Camp David. But you know what? The real story didn't even come from an official press statement. Instead, it was a legal pad placed right in front of Secretary Bessent that happened to catch a photographer's eye. Right there, under the to-do heading, was a single, immensely powerful line: buy Japanese yen, $5 to $10 billion. That wasn't just some casual reminder to himself, it was basically a broadcast to the global markets. And literally within hours of that image circulating, that one handwritten line on a legal pad actually moved global currency markets. Section 2, the Japanese yen intervention and moving global markets. This brings us to our first major pillar of Treasury influence today. Leading up to this exact moment, the yen was under some intense pressure, flirting with its absolute weakest levels since 1986. Secretary Bessent had been warning that the yen was very undervalued and that this excess volatility just wasn't healthy. Now, to put this into some historical context for you, the last time the United States directly intervened to buy yen and prop up the currency was way back in 2011, a 15-year gap. That really underscores how incredibly rare and significant it is for the U.S. Treasury to step in and directly manipulate foreign exchange rates to this degree. So, you might be wondering, how exactly does the U.S. government just buy billions of dollars worth of another currency? Well, here's how it plays out. First, the Federal Reserve Bank of New York acts on behalf of the Treasury, and they start by selling euros. Step 2, they use those funds to buy yen, executing these massive trades through major financial institutions. Think heavy hitters like Goldman Sachs and Morgan Stanley. And finally, Step 3, this huge influx of demand does its job and strengthens the yen globally. And this brilliantly illustrates just how massive the immediate impact of that intervention really was. By the time New York trading closed that Friday, the yen had jumped from trading near 159 to the dollar, all the way down to 157.6. In the high-stakes world of foreign exchange, where literally fractions of a penny matter, this coordinated effort achieved exactly what it set out to do, almost instantly. But why do this in the first place? Well, there was a really high-stakes, dual purpose at play here. On one side for Japan, a stronger yen protects their economy from the crushing burden of rising import costs. On the other side, for the U.S., a stronger yen aligns perfectly with the administration's trade goals. It ensures America maintains a competitive advantage in global trade, which, as we know, can totally be undermined if a foreign competitor's currency is allowed to become too weak. It's a textbook example of leveraging financial mechanisms for international diplomacy. Section 3. The historic gold coin and minting cultural heritage. All right, we're shifting gears now from macroeconomic policy to something highly symbolic. This week, the U.S. Mint announced a brand new $1 gold coin featuring sitting President Donald Trump. The front has the president facing forward alongside the words "Liberty," "In God We Trust," and the dates 1776 to 2026. But the reverse side, that saw a really interesting evolution. An earlier draft actually depicted the president with a raised fist, but the final design ultimately went in a different direction, featuring a bald eagle from the presidential seal positioned right behind a shield. To really understand the stated purpose behind this release, we can look directly at Secretary Bessent's official press release. He stated, "As America commemorates 250 years of independence, this new $1 gold coin to honor the enduring legacy of liberty and a lasting symbol of patriotism." The core framing here is clear. It's a celebration of the nation's upcoming 250th birthday, positioning the coin as a collector's item to mark a major milestone in American history. Now, placing a sitting president on a coin is incredibly rare, so it naturally drew some legal and historical scrutiny. But the Treasury Secretary directly addressed this by pointing to a specific historical precedent. Back in 1926, then President Calvin Coolidge was placed on a coin to mark the nation's 150th anniversary. Bessent's argument is that the 2026 coin follows that exact same logic for the 250th anniversary. As for President Trump himself, he responded to the coin in an interview, calling it a very unusual honor, but adding that it was cute. Section 4. The Digital Asset Clarity Act and Future Financial Infrastructure. So we've talked about foreign exchange and we've talked about physical currency. Now let's look to the future. Secretary Bessent also used his massive platform this week to push aggressively for future legislative frameworks in the cryptocurrency space. Specifically, he was urging the Senate to pass a piece of legislation known as the Clarity Act. So the crucial point is, this legislation is essentially designed to be a comprehensive federal rulebook for digital assets. Right now, regulation is highly fragmented. This bill aims to change that by assigning primary regulatory authority over digital assets to the Commodity Futures Trading Commission, or CFTC, giving the crypto industry the long-sought legal certainty it's been asking for. However, as you might guess, this is a highly debated piece of legislation. Let's look at both sides. On one side, Secretary Bessent argues with intense urgency that this bill maintains American leadership, prevents the industry from fleeing overseas, and provides that much-needed legal certainty. On the flip side, critics and legal experts warn that the bill creates loophole-ridden exemptions. They argue it acts as retroactive legal immunity for previously issued tokens and utilizes a super broad definition of decentralization that could ultimately weaken investor protections compared to our existing securities laws. And in his plea to Senate Democrats to stop delaying the vote on this legislation, Secretary Bessent created a rather surprising internet culture moment. Get this. He actually took to social media and quoted Satoshi Nakamoto, the pseudonymous, highly mysterious creator of Bitcoin, saying, "If you don't believe me or don't understand me, I have no time to try to convince you. Sorry." I mean, it's an incredibly unique moment to see the traditional power of the U.S. Treasury Secretary channeling the foundational folklore of internet money to push a legislative agenda. Section 5. Bessent's Expanding Influence and a Week in Review. Now, despite the urgency and the Satoshi quotes, Senate leaders have indicated the Clarity Act likely won't pass before the August recess. But honestly, whether a specific bill passes this week or next month isn't the main takeaway here. Let's summarize the sheer breadth of influence the Treasury demonstrated in just a matter of days. We're talking about intervening boldly in global currency markets, minting historic national symbols, and aggressively legislating the future of financial tech. It is just a stunning display of economic, cultural, and technological power, all radiating from one single office. And that leaves us with a fascinating question to consider. As the Treasury's reach clearly expands, stretching all the way from traditional foreign exchange maneuvers in Tokyo to the absolute cutting edge of decentralized cryptocurrency regulation in Washington, what aspect of our daily economy will they seek to reshape next? It's a rapidly evolving landscape, and one we will undoubtedly continue to learn from. Thank you so much for joining me for this explainer. I hope it really helped you grasp exactly what's happening at the highest levels of global finance right now.